Hey there, welcome to another episode of The Block Crunch, the podcast where we talk to investors, entrepreneurs, and builders in the crypto space for 20 minutes every week. I'm your host, Jason Choi. And if you haven't already, please do rate and subscribe on Apple Podcasts, Spotify, and Stitcher. And also recently, we launched our YouTube channel where I'll be posting some of our video-based interviews as well as audio files of the podcast we've done so far. So if you're more of a video person or you want to see what I look like or what my interviewees look like, do go on YouTube and search for Block Crunch Podcast and be a subscriber today. And this week, we have someone very special on the show because we have Bonnie Cheung, venture partner at 500 Startups, one of the most active seed accelerators and investors in startups around the world today. 500 is also an early investor in the companies behind the famous cryptocurrencies Omise Go and Stellar. And Bonnie is currently helping 500 run their blockchain track, for which they're inducting blockchain-based companies into their program. And for those of you who are particularly interested in venture capital, in this episode, we will be diving deep into how crypto and ICOs and the entire blockchain phenomenon might change or disrupt the entire venture capital industry. But before we get started, I'd like to give a very special thanks to Edith Young from 500 Startups, who has been a personal role model of mine and who introduced me to Bonnie a while ago. So with that being said, I'm incredibly excited for this episode, so let's buckle up and dive right in.
This worldwide phenomenon.
So Bonnie, thank you very much for coming on to our show today.
Hi, Jason. Thanks for having me here today.
For sure. So can we get started by having you tell us a little bit about who you are, your background, and how you fell into the crypto rabbit hole?
I love your description of it, the rabbit hole. Of course. So as you already mentioned, my name's Bonnie. I'm currently with 500 Startups, based most of the time in Hong Kong, but with a vertical focus on blockchain projects. For those of you who are not familiar with us, 500 Startups is essentially an early stage, seed stage venture capital firm founded in 2010. Well, 500, because in the beginning, our aspiration was really trying to be able to fund 500 startup companies. To date, we have over 1,800 companies under our belt, so definitely too late to change the name. But regardless, we're very happy and thankful. And now we have teams, in addition to our Silicon Valley group, teams in Mexico, Japan, Korea, China, Southeast Asia, etc. And in the blockchain space, our early investments really started with Omise, which is the issuer of Omise Go token, Lightyear, which is the business side of Stellar, to more recent projects like Metadiem, Libra Networks, Solana, etc. As for myself, I was born in Shanghai and grew up in Hong Kong. And when my parents, I guess, realized I was having a little too much fun at school, off I went to boarding school here in the States and continued to stay to do my undergrad at Dartmouth, double majoring in engineering and economics. Started out in the enterprise software world as an engineer. And one thing I quickly learned after working on a lot of these so-called mega IT transformation projects at various companies like AT&T, Sprint, HP, etc., is not only do they cost tens of millions of dollars to buy the software, but essentially requires every major division of the company aligning. And at the end of the day, honestly, the internal incentive alignment is almost as important as the execution of the technology. After that, I went on to work for a private equity firm, which in addition to training me in writing crazy long investment memos over tons of cups of coffee, it also taught me that those who know how to skillfully raise and deploy capital can often really make or break great companies. And my last stop before, finding my true love, blockchain, I decided after dealing with computers and machines and money, it's time to do something in the real world. So I actually joined the healthcare space for 7 years, leading strategic planning for one of the largest healthcare distributors in Asia, where I was able to see firsthand how labor and manual intensive an industry like healthcare supply chain still is. So back to the main question, how did I end up in this rabbit hole? How did I end up in this world of blockchain? I remember it was either end of 2016 or beginning of 2017 when my old boss at the private equity firm asked me to take a look at this company I remember the name, it was called Bitfury, which was then raising a round of capital. A company which is at the time holds about 13% of the mining power in the world. At the time, I've just quit my job to take a year-long sabbatical. And to be honest, when I saw the name on the cover of the deck, I thought it was another one of these, crazy ass tech geeks with another crazy idea until I got to the financials page and I stopped and thought to myself, wow, I really can't remember another project with this kind of consecutive year-on-year growth in revenue. So I said to myself, you know what, there's got to be a mistake in there somewhere. And that's when I started doing a lot of research and trying to read on, any papers, whether it's the Bitcoin, white papers or any type of Medium postings I can get my hands on about the space. I guess looking back, I do regret a little bit not flying back to Hong Kong to meet the team, as I guess I was having a little too much fun traveling around Africa. But essentially, that really marked the beginning of my now, more than a year-long love affair with blockchain and crypto. Because for the first time, I saw a possible working solution that not only is open source, crowdsourced, but it incentivizes, all different parties to work together with each other without the fear of, these classic economic problems of, prisoners' dilemmas and also attracting bad actors.
Well, jumping into venture capital today, the reason why I love 500 Startups, which you're working for, is not only that it is one of the most active seed investors, but it is also perhaps one of the most global in terms of where its partners come from, you yourself coming from Hong Kong, and also the companies it invests in around the world. And I know in a panel recently in Boston, where I was there as well, you spoke about the borderless innovation of blockchain. So can you explain a little bit more and talk about what excites you about blockchain outside of the US?
Well, one of the most intriguing parts for me about this Web3, what we refer to now evolution driven by the blockchain technology, is really this true borderless nature that is very drastically different from the previous waves of, say, what 1.0, 2.0. And what I mean by it is if you look at our Web 2.0 today, we often refer to, these are the FANG of the West, the Facebooks, the Amazons, the Netflixes and Googles. And then we have, the BATs of the East, the Baidu, Alibaba, Tencent. And looking back at this, last wave of Web 2.0 innovations, one thing, we can all recall is the days of, so-called copy to China days. Or, recently, a lot of people are turning around and saying copy from China in the e-commerce space. Why? It's really because there's always been this time lag, and it took time for innovations to spread across geographic boundaries. And so it gave really local players and early adopters time to copy and redevelop some of these innovations locally. And not to say that, the existence of many of the various regulations in these so-called traditional industries do limit foreign ownership in countries like China, Indonesia, Vietnam, etc. But when it comes to, this Web 3.0 and the blockchain world is one aspect nobody can fail to notice is this notion of being an international project from day one. In a way, I give it a lot. I think about it a lot. And in this case, at the end, my conclusion is, we really have to thank regulatory ambiguity. And in some cases, even, hostile regulatory environment as a blessing in disguise. And the reason is that, it pushed these projects to get out of their geographic comfort zone as they search for stable environments to work on, their project itself, right? Take Ethereum. Vitalik moved to Zug Valley in Switzerland to get the foundation going before, again, relocating to Singapore, which was very proactive in voicing their positive stand on the blockchain innovation space. And then, of course, comes China's September 4th, 2017 ban on ICOs, which to me, is again another huge blessing in disguise because it gave a huge push on all the best Chinese teams to go abroad. And many of them ended up here in Silicon Valley. In a way, we definitely have to, in this case, I guess this is the first time I would say is thank the lack of regulatory clarity in many countries for this new wave of true borderless projects. As in the space right now, you definitely don't hear people refer to projects as, oh, this is the China scalability project, or, oh, that's the Korean solution to interoperability. People just simply refer to the team and the name of the project and the problem they're trying to solve. So, and I also did a quick look, at the top 50 projects right now by market cap. And if you look at the founding teams, right, it's really an equal split, 1/3 between Asia founders, US founders, and the rest of the world. Not to mention that most of these are open source projects. So many of the key contributors are very much from all parts of the world. So in a way, I guess, in terms of figuring out various technological advances, we still have to, a lot of the challenges we still have to overcome in this space, whether it's scalability, privacy, interoperability. I must say I am very optimistic in a sense that if we thought Web 2.0 was incredibly fast in changing the way we lived in 2 decades, this Web 3.0 will literally be Web 2.0 on adrenaline. So this kind of my take on it and my optimism. But at the end, though, one important thing I do want to point out still is that regardless that there's been so much noise and activities in this space, we have to recognize, we are still extremely early in this Web 3.0 journey. Honestly, we have disrupted nothing so far that has any true impact on our lives, except perhaps, the sales figures at Lamborghini. But if you think of the beginning of the internet, I almost want to describe and compare it as we haven't moved that far from, that first hello message that was sent across 2 terminals. So still a lot of work to be done.
For sure. And speaking of these kind of more fundamental problems, a lot of work to be done. You explained before that blockchain has a lot of fundamental problems needed to be solved. And I think your colleague, Edith Young, China partner of 500 Startups, mentioned that the blockchain ecosystem is full of people trying to build fast cars on a highway that's not being finished yet. That's a personal favorite analogy of mine. So from an investment perspective, do you think it is too early to be investing in, say, decentralized applications? Should investors be focusing on things that solve more fundamental problems, like you said, interoperability or scalability first?
Well, when they say jokingly a lot of times, right, they say crypto years is like dog years. And I have got to say, so far, it has definitely lived up to the expectations. I remember that was, less than 3 months ago. I was speaking on Bloomberg and talking about how at 500, we are very much focused on investing in projects that works on really the foundation layer of the protocols, such as scalability, privacy, interoperability, and DEX. And I kid you not, as of today, I'm feeling completely scalability and DEXed out. In the past 4 weeks, and of the 100 plus, white papers we've gone through, there were really no shortage of super impressive scalability projects. And all staffed with, either PhDs in cryptography, distributed networking engineering, highly respected academics in the blockchain space, and a lot of, ex-core members of the Ethereum Foundation. So by now, as a venture investor, I almost feel like, we're filling up our quota on the scalability space very fast. And it's time to expand, our focus through, into the next set of sub areas, and who knew this could happen in a span of, just less than 3 months. So, gosh, definitely dog years. And now I'm personally very interested in researching and looking at more and more projects. One area is projects working on identity. And by this, I mean, in a sense, we see this as a very clear use case that requires a public chain to work. And at the same time, though, instead of, our current definition of identity as we know it today, the future really would be a much richer identity with many, many partitions. So by that, what I mean is, give you an example, is I really see our genomes as part of our identity. And when I was talking to Li and Feng, actually a very large, supply chain player in Asia, we kid, and said, really, your body measurement is also your identity. Instead of small, medium, large, or 0, 2, 4s, you really literally would have technology that captures every single part of your body as a full measurement for manufacturers. So to us, identity is not limited to only what we know it today. And that's why we're quite curious and excited about the space. One company we've recently invested in is called Global ID. And it started out by the ex-chief compliance officers of Ripple, Greg. The other side, besides identity, is we're also trying to focus more on teams that has very clear use cases that drives adoption and usage of any public chain ecosystem. What I mean by that is, example will be the digitalization of various assets. So take in-game skins and weapons, right? The incentives to developers is clear, as the solution on blockchain will enable them to ultimately increase their earnings from being creators, because they would be able to capture micropayments in all subsequent exchanges of the asset. While at the same time, it's very much a natural extension to a lot of the game development platform players who already hold a large developer use base. The reason why this space become interesting is we started noticing that many of the existing projects that have already issued a token and are actually on the exchange, they're all now looking at the next challenge as trying to build their own ecosystem of dApps. And to us is, then the power goes to whoever holds user base and a real use cases, because then they can honestly, in a way, shop around the different chains until they find the one that can satisfy their needs of the use case in terms of throughput and also in terms of interoperability.
Mm-hmm. Now, shifting gears a little bit to focus on the future of venture capital. So talking about ICOs as both a new fundraising and recruitment mechanism, right? Technically, anyone anywhere can invest in a token issuing startup. I can go on Binance today and buy any token that I want as long as it's listed on there. So assuming that more startups digitalize or tokenize their equity, as you said, or issue this type of non-dilutive tokens in the future, do you think this will affect how Silicon Valley VCs invest?
Well, the short answer is definitely. At the least, the tool sets we have at the VCs to invest now has been enriched by this new aspect of fundraising. It is really like opening Pandora's box. There's no turning back. We're just internally discussing actually a couple of days ago on this very topic, is more so from an angle of how does this change this addition of liquidity helps us in terms of making better investment decisions on behalf of our LPs. While at the same time, how can we improve the current format of the SAFT contracts, which is relatively new as well, to minimize a risk of holding a completely new asset class that is neither equity nor commodity in our view. So from an investment decision perspective, the added liquidity actually drives us VCs work harder. Why? Because now, in a way, we really have the ability to rebalance our portfolio as often as we want. A feature that used to be only available to investment managers really on the public market side. Instead of, invest and pray, now we can view both macro conditions, industry trends, as well as team performance as often as we see suitable. And through the review, be able to make investment adjustments continuously throughout the lifetime of the fund, right? So what does that really mean? As new informations become available as the projects develop, we can now actually do actual adjustments in our investment dollars. So the option to us VCs is no longer a simple question in the previous days is whether, do we want to double down or do nothing? Right now, it's whether, do we want to double down, do nothing, or we could actually choose to pull out the investment via liquidating in the secondary market. So I think this to us is very interesting.
Mm-hmm. And I think just to bring up something that I think people outside of the startup world might not know, in the venture capital investing process, sometimes the VCs have to pitch the startup as much as the startup has to pitch the VC. And I think in the context of crypto, where basically everyone, non-VCs and non-investors can put in money, capital is more accessible than ever. So my question to you is, how do you as a VC differentiate yourself from, say, all of these new investors, these new retail investors that have just come into this space, especially when you see this really popular crypto startup that everybody wants in, but there might not be enough space for everyone?
Well, the way I think of this is really, as you observe the current landscape, is ICO itself is also morphing very quickly. From the times of truly, it mimics a lot more like a crowdfunding source. And of course, all the teams really enjoy the fact that the fundraising can be done within 5 minutes and the war chest is full. But one of the key lessons I see many of the early ICO projects are starting to learn is that, there's really no free lunch. Everything comes as a price. While the crypto bank account may be flooded, what the team realized is sometimes, money doesn't really translate into expertise and network. While it may sound, amazing that, they were able to raise 200 million, they've started to come to the recognition that this also means they're now essentially becoming a public company from day one, and have to deal with, the communities. They're no longer free to pivot that easily because the communities hold them up to, what they were promised before, a lot more than I think sometimes having to deal with a few early investors means. And then also, when there's schedule change or slippage, which happens a lot, with early investments, right? We all understand as investors that teams find out more as they learn along the development pathway. Timelines change. Even the product itself could change. So a lot of the times, that in the VC world meant, they communicate to a small group of early investors. They make sure everybody's bought in. But now, they're almost like having to have, I often compare these AMA calls. It's almost like a annual call, with shareholders for a public company, right? Is really freaked out as you don't know who's going to be on the call, what kind of questions you may get, et cetera, et cetera. So I think in a way, and the last thing, of course, is that, instead of focusing on their development schedule after the fundraising, is all of a sudden they're all psychologically impacted with this high volatility in the price of the token. So in a way, I think, a lot of the teams we're looking at is that slowly they're actually going back into ICO is turning more into similarity to private sale. Actually, the last 5 to 6 projects we looked at, majority of them actually did not have a crowd sale. They all went just pure private sale, even though it's an issuance of a token.
Mm-hmm. Got it. So given how different these ICOs and private sales are from, say, more conventional venture capital investing, do you think most VC firms today already have the infrastructure in place to tackle this new type of investments? Or do you see VC firms having to build out specific tracks or teams that are just focusing on crypto to tackle this?
To do this, for sure, VC firms are having to adopt. And the two areas of changes that we need to cope with. One is more from the legal perspective. Even with 500, right? For a long time, we were not able to do token investments because of current fund LPA agreements. But finally, we finished off, the amendments on the LPA. So now we can invest in tokens as well as equities. So this is for sure one area where all traditional VCs, if they're not raising a new fund, a lot of times if they need to amend, it will take them some time. And then second part of it is really learning how to perform due diligence on token projects. What is different than before is similarities first, right? Looking at the team, looking at, what the market potentials are, I'd say on that side is still quite similar. But then on top of that you really look at, you often hear, right? We often observe the communities they've built, because many of these projects in the early days are all about building an entirely new chain. So what kind of community do they have on Telegram, on Discord, on Reddit? What topics are being discussed, right? Because quality of the community also matters. In some communities, yes, I do see a huge volume of people, but honestly, if I filter out the words of Hoda, Moon, Lambo, and when is it going to moon? It's literally like 90% of the conversation is gone. So that's one thing, quality and size of the community. The other part is obviously, even at 500, because we spread across so many different industries, we also do partner with other teams. For example, for blockchain, we do partner with Decrypt at Berkeley a lot in terms of really doing the code review. Because that is one thing right now is still quite important, because these are all open source projects. A lot of them are really all out there in the GitHub. So GitHub review is quite intriguing in terms of not only the code itself, but also looking at the number of issues raised, how fast are these issues being resolved, who are the participating key contributors, et cetera. So I would say from a technical due diligence perspective, you're also having to update the current sort of due diligence process for a lot of the traditional VCs in this area.
Got it. So I'd like to focus the last 2 questions of today's interview on you. So the first question being, you're of course based in Hong Kong, which is my hometown. So I'm curious, what are the cities outside of US that are becoming crypto hubs that entrepreneurs and builders should be looking at? And is Hong Kong one of them?
So in terms of project teams, right, we've definitely see clusters of blockchain projects coming from South Korea, China, mainly cities like Hangzhou, Shanghai, Beijing, and Singapore. And most of these, I would say, are working on either protocol level problems such as interoperability, privacy, etc., or DApp type of projects, so the distributed application type of projects like asset digitization of real estate, of artworks, etc. Given Hong Kong's long-standing reputation as a top global financial center, my point is that naturally it is very well positioned to be the leader when it comes to crypto financial services and infrastructure. In addition to companies, I'm sure you have heard BitMEX, which is a crypto derivatives trading platform. I believe at one point was processing over $6 billion in transactions a day. There are also, very innovative, relatively new departments in existing firms like Octagon Strategy or Ember.ai in the crypto asset management side, which are both growing very well, each with over a billion trading volume monthly. So the key for Hong Kong, or in fact, any other cities looking into a new space like blockchain, is always to leverage your existing edge when developing, new tools, right? And for Hong Kong, it's definitely the top tier resources and the know-how we have when it comes to efficient capital market management in the fiat world. As a venture investor, we often look at, for every companies we want to invest, one aspect is what is the barrier to entry as an indicator of how likely that business will be able to grow and succeed and become the market leader. And I think it's very clear Hong Kong's barriers to entry is definitely its long-standing expertise in managing efficient financial markets.
For sure. And just to close us off with our last question, what is one piece of advice or a book that you've read that helped you out the most when you were first starting out in this crypto space?
Well, as much as I feel like, I'm still having an amazing love affair with blockchain, I do need to deblock myself from time to time. And I gotta say, one of the outlets is reading things that are completely unrelated to blockchain. So one of my favorite books from the past year is definitely Daniel Kahneman's Thinking Fast and Slow. So if you love synopsis as much as I do, if you just want to have one takeaway from the book without having to read it, I think it's to just remember from time to time, right, how susceptible our human mind is to systematic errors. In a way, this has really helped me keep a clear perspective on situations such as, this recent craze in ICOs and tokens. So to conclude, I think at the end of the day, whether you're trying to develop an investment in a thesis or a corporate strategy, or even, your life strategy, it only works if, at least in my point of view, is if you review and adjust it periodically. Because remember, even though we say change is the only constant, in the world of Web 3.0, this is almost like an understatement. So, looking back just to see how much things have changed in just 3 months, I would say you just have to start really doing this kind of review and adjust more and more often now.
Mm-hmm. For sure. Well, I think that's a great note to close this interview on. So thank you very much for coming on to our show, Bonnie.
Hey, thanks, Jason. A pleasure.
And back to our listeners, thank you very much for listening to another episode of The Block Crunch. If you haven't already, please follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi, because I share the latest episodes and updates there. If you haven't, please also rate and subscribe on whatever platform you're listening to this on, because it does help us get this out to more people and help spread the crypto virus. Once again, I've been your host, Jason Choi, and I look forward to seeing you at our next episode.